All right, today is January 6th, 2023. Here we are looking at EU, 1 hour chart. On my left, I got my buys. On my right, I got my sell drawings. And as you can see, we've started having this kind of massive reaction after taking out this buy zone. This reaction here was fueled by NFP, non-farm payroll. But what was interesting about it is where it landed, okay? And you can see immediately I've drawn on my what would you call this? My dollar symbol, I guess. I was gonna say my liquidity tool, but I don't know what you call it. But anyway, I drew that on the line with the dollars on. I drew that on there because for a big reason. If you actually look at what was mitigated here, this is not a high time frame buy primary by any means. This is just a range, as is this. This didn't really, I mean, there was liquidity it could kind of took from here, but this whole range here, if for number one, is not a primary, and this was not a primary either. Unless you're sort of considering this the liquidity, and then this was the grab, but the grab occurred from this high here down to this low, and really didn't grab anything other than its internal liquidity. So it's not what I consider a primary, hasn't landed inside of a primary. And so I'm not treating it like that. So to see it like have such a massive reaction is interesting. This is most certainly liquidity, a liquidity creation move, in my opinion. And with the aggression, the speed and the aggression, and the break in structure, I think what we're going to see is a reaction from right around here. Interestingly enough, actually, this is I believe where I've got a 1 minute zone, sell zone. Let's actually look at it real quick because I've got a big 1 minute sell zone here that I'm expecting to be a reaction from. And I've been talking about this for the last couple of days, this one area, and to have price zip right up to it, quite interested in it. Now, I did mention that I'd be actually interested in having a 10 pip stop here and going on a risk entry. Now price has come up. It's nearly 12 o'clock midday on Friday. Not interested. If it bobs up right now, takes me in, for instance, I believe we'll get a reaction, but I don't want to hold over a weekend at all. So it's for that reason I wouldn't take this right now. But I am interested. So if this becomes the high, it'll be very interesting to see what happens on Sunday at the Open. I might actually even make myself available for it. But we'll see. That's all hindsight, or not hindsight. That's all future stuff. So let's see. So we got this the sell on the sell side here. I'm looking at what we mitigated as we're pushing down. We're obviously going for lower prices, and got this primary in here. Pushes down. It's the last known 1 hour primary that I can find on here. Absolutely nothing else has formed like that. So this whole sort of move here is probably just creating something, and in my opinion, it'd be likely that we would potentially pull back here or dip into it and then sort of do something, form something that would create a primary that connects is really what I would think. So something maybe like this, but it's we can't predict it. It's just my guesstimate based on what I've seen with price action over time. Now it could actually come up here, take this out. We could even take out this high and continue higher prices, in which case this is just going to become massive cause for later, and it's all going to get ran. It's just a matter of when. I do have bias that this will hold. So even if we come above this top, I do have still bias that this block will hold. That's really my outlook on the 1 hour front. So I wake up to the charts and see right around sort of 6 o'clock, we've sort of pushed down here and we're initiating higher prices. So let's bump to the charts. I'll show you what I was seeing. Okay, so on my buy side, first and foremost, I think this right here at 7 o'clock. I wasn't at the charts at the time to see this one, but I believe this is like my bread and butter setup, and I just want to first talk about that because it was clean, obvious, and easy to have entered in on this one if you're a participant and know what to look for. So let's first off draw two lines. We're going to draw the line where we actually stopped price, we're then going to draw the line where we broke above price here. And I'll explain why I believe this to be a very powerful entry modal, we'll just say. So let's span this across. There it is. Okay. So you got to kind of look quite a way left. So first line is where we stopped. Second line is where we moved up to. Cool. So the first line where we stopped right here. So if you can imagine it, we're pushing up, we're pushing up, we're pushing up. We stop right here and pull down. We create this range. We then initiate. Actually, sorry, the range is here that we created. We initiate up to this point. We then take the liquidity and then we go. Okay, so here's that range. What do we know about this? Range, initiate, break of structure. Here's the structure. Pricing came up to the second line, pulls down, takes the liquidity from this range that was just built just before that break of structure, and then this becomes a new buy primary. It's lower time frame, but it's using massive structure that was formed over here. So once we see something like this on a very prominent high, this is a very easy to see high. It's like if you scroll out on many time frames, you'll be able to see it. And this is something I see a lot of the time when we're initiating prices higher. So let's zip out, go back to that entry. So there it is. So what would I've been thinking? Well, realistically, you just want to enter as soon as that has formed. You can, one of these candles probably did break structure on the left as well. We don't need to go back into it, but you probably just want to enter like this. Now you want to be studying what happened during the B2C leg. And in this instance, it's rare to see this, but you didn't actually see any kind of anything occur in that B2C leg. There was no range created, no nothing like that. So this was literally a move that was created by them, the market makers, just to fuel higher prices. They were just doing a quick liquidity grab from here down here and had no intention of pulling back into this area. Yeah, sure enough, we bobbed straight back in, but it wasn't to like mitigate anything spectacular. It was there's nothing in this area, nothing. So what are we trying to mitigate? There has to be a transitional. And the only transitionals that I know of or can see here are kind of in this area, this range here, where we slice up, slice down, slice through it again, and notice how they kind of stack to this area. So this is probably the only thing I would have been looking for, like to come back and bounce off of. But again, it's transitional. So do we really want to be mitigating something transitional? Not particularly. What do they mitigate here? They just mitigated this block of the range here and initiated higher prices. So if you didn't get in, if you couldn't get in or understand how to get in here, you could have just waited because there is another opportunity to get in from the connecting range. So let's pull that out. Let's just clean this up just a little bit. So here's this connecting range initiation. There's IPA in here, inefficient price action, and prices initiated higher prices, right? It comes back. Where does price tap? Right there. So if you're seeing this, right, we've just had this buy primary form and you're seeing this connecting range. There's nothing really beneath here. There's no real reason to come beneath here. This is, again, transitional. So if they do come beneath here and mitigate that, that's just going to become for future mitigation, not really where we want to be entering, right? So if you see this kind of thing going on a connector, and you're seeing that initiation away, break structure, then you can start really honing in on your lower time frames. And I can see it quite clearly without even having to go down even to a lower time frame, but I'll just draw it out here. We've got this range here, small range. We've got this break of structure. So we'll go range, initiation, break of structure, and then we come back from this high down to this low. We come back and initiate higher prices. So the moment you break structure here, you've confirmed your primary has been created. Actually, I think it might have been here even. If we go to drop to a lower time frame, we'll see it. We may as well. We're price action investigators. Let's just do it real quick. Go to about here. Oh, we're already on a 15 seconds. My bad. So we'd have to drop down even lower. no big deal. When price action is initiating like this, I don't know if you noticed, but when I popped my tool here and say did 1.5 pip stop or 2 pip stop, see how small it is on a 15-second range, or this is a 5-second range that we can see quite clearly. We would need like a 10 pip stop. So price is moving aggressively. So we would definitely up our stop loss, definitely increase the stop loss, but also we reduce the analysis time frame. So we can now move to 5 seconds instead of like what would be normally comfortable on a 15 seconds. We can look on a 5 second and we can increase our stop to 3 pips, right? So that's something we can definitely do. Anyway, we get this touch. Let's talk about this. To get this touch, we get this range initiation. Here's that breaking structure. We pull back, creating this buy primary. Now, do you need to wait until it initiates? That's up to you. See how it doesn't actually break here. It breaks on itself, which is a good enough sign, but you could also wait for the break structure over here. And then it's just about entering the market. How do you want to enter? You know, it's like literally just pulling the trigger at this point because you've got the buy primary. You know where your low is. You know where your low is. So look from your B to C leg. This is the only little range that's sort of created in here, but notice it doesn't touch it, right? So that could be a stack for future. So are you going to be endlessly waiting? You know, is that where you're going to place your 2 pip stop when markets are moving so fast and furious and aggressively, and hoping the price just comes back here? You could have maybe gotten a touch, you know, like depending on a different liquidity provider or whatnot, but it's not really something I would be looking for. You could also argue that you've got this other range here, range initiation, break structure, comes back in, takes the liquidity from here, and starts initiating away. Once you get once you get this break structure here, then it's literally like you're just playing off this range again. Well, where's the high of that range? Boom. Maybe you could have entered here. If you couldn't have figured out an entry over here and you're waiting here, for example, this is another one. So you're just sort of following intention and looking on the lower time frame for an entry that we understand. Range initiation, wait for them to come back in, take the liquidity, and initiate higher prices again, right? And then but I think the key is allow it to form. I think that's probably the biggest area I've taken losses on, is if I don't allow things to form properly. That's when I kind of get sort of FOMO-y. You know, I'm just sort of trying to jump the gun. Anyway, let's clean all of that malarkey up. So that was all what gubbins in there. Let's clean that up. Boom. Right, there we go. This is what I see, right? So we come to the charts and I see buy primary stacking in an area where when we're coming up to this kind of an order block area, right? This kind of thing. And so as I see us entering this area, I'm thinking to myself, well, this is a great place to turn around, but we need to see if we've getting any signals, getting anything from price action. We don't, just because it's an order block, it doesn't mean we have to start looking for sells immediately. It could be that we're planning on blitzing through. So the first thing I noticed is that we created a buy primary here and initiated very slowly. And when price sort of goes slow, it does sort of indicate that we are slow, price is easing and slowing, create cause for a future move down, right? So that is potentially what's going on. We are actually stacking liquidity, because I see a buy primary, another buy primary, another buy primary, 3 of them in a row. So I'm really looking for shorts at this time because I see the stacking, and the stacking to me means short. It just they usually only do that when they're about to run price, but I've also noticed that they'll do that when they're about to initiate price as well. But it's a rarer occurrence. Like today was a little rarer to see this, but it doesn't really matter. You don't have if you just keep holding on to your primaries and watching what your primary ranges are going to do, you're going to figure it all out. Because, for example, we get this primary in here, it doesn't connect. See this arrow that I've got drawn out? I was expecting this to connect into this block here. The fact it didn't really give me weight that we were going long, but all you do is just wait for it to form, and as soon as it forms, it's like you couldn't ask for a better setup, because it's like this was the range that was created during the B2C leg, and it held price most beautifully and then initiated away. We could have easily found an entry sort of coming out of here. I wasn't actually trading this at the time. About 9:30, I had stopped already, like looking at the charts. But this would have been an absolute gold sort of area to start entering from, because this held price and starts initiating breaking structure. And so it's like it's weight. It tells you what's happening. We're running through. We're not actually pulling back and looking for mitigation. I'll show you my one trade that I took today, which was here, which I thought was absolutely picture perfect. It was a really lovely looking setup as well. So here we are in a higher time frame sell primary. Price has ran through that primary, right? Taken the liquidity from above it, just okay. And what that does is created this sell primary range. Because if you think about it, this primary comes up here, takes the liquidity that was all sort of stacked up here. Remember, this is an old time primary. All this gray is, we'll look left if we need to, but you can sort of see it's just an old primary, right? And as price comes in, it takes that liquidity from above and initiates lower prices, breaking structure, right? So I've got a primary that is active. Now, as I look at the two ranges, as I look at the B2C leg, there's two ranges. Where do I want to play from? The top one. And so I actually put a limit order on this. I go limit order right. You can see where I entered. I was like trying to bank sort of somewhere in between here, just trying to get my stop safe with a 2 pip entry. Got taken in, absolute beautiful entry, and started initiating away. Now, as price starts sort of turning back and coming back to me, I'm thinking to myself, well, where am I going to put my stop? And it was this mitigation here that was, where was it? Let me pull up the buy side here as well. We do need to see the buy side as well. Okay, so we're at 853. Because I remember, where is it? 853. So somewhere around here. Okay, so let me just, give me a sec. Let me just get my chart sorted here. Here it was. Okay. Right, so even though I've created a sell primary, I'm just going to remove it from my charts for a second. You can see the sell primary, it's obvious, it's there, okay? But what was this? Range, initiation, break of structure. I think it was actually a break onto the left-hand side of the screen, or something like this. It actually broke structure. Then they came back in and initiated higher prices, creating a buy primary. So when I saw that price had, let's put that back on now. So here's that buy primary, right there, and it formed a sell primary. So it went from buy primary to sell primary, which is a very strong looking move, especially for the sells. And I see the mitigation as well. So I'm already in, but I see the mitigation, and you see that the high there. Where does that high go to? Right to that buy primary, right to the very top of that buy primary, right? So I'm thinking to myself, wow, in recent days, right? Let's jump to a higher time frame look. In recent days, as we've been mitigating down. I've already removed it from my chart, unfortunately, but as we've been moving down and moving price, like these stops that happen in transitional areas and have big movements away, breaking structure. Yes, we know they're going to come forward and take liquidity because they're transitional, but they don't have to take it from it right now. So these ones, what we notice is they mitigate primary ranges. And so if they mitigate a primary range, it sort of gives you weight to say that, okay, the price can actually move in a different direction, or it can move away because it's mitigated that. It's almost like, yes, it's a transitional, but it's a big thing for a transitional. It's like, yeah, we're going to come back for you a lot later. So this became a transitional range, but it was a buy primary range, and it got mitigated completely. So when I saw that and we initiated away, I was thinking to myself, holy crap, that is a great entry. I'm in like Flynn. So where am I going to move my stop? Like, what do I want to do with my stop? And I just moved my stop right to the very top of it, because I'm thinking to myself, absolutely, I do not want any more mitigations to occur. That is absolutely enough. We've had that one there. We've initiated away. So if they're going to need to come back for a second time and pull up, take more, I'll get in again. but that's such a golden, good-looking mitigation that I'm gonna just hold for that the high will hold basically. Now, I wrote spike candle here because this is where I got taken. I didn't get taken out. I actually removed myself from the position. But I closed it, and I'll show you why in just a second. Hopefully, we can go down. And this is something I wanted to talk about. So I didn't notice this spike candle here at the moment of my entry. I was already entered. But if I had have seen that, that would have given me kind of some interesting information. So I don't know if you've ever noticed this, but when you're on your chart and you've got like a bar and it's pulling down, then all of a sudden, it's a full-bodied bar, and then all of a sudden you've got your bar, your body's like here or something, and all of a sudden you get this wick. It either just forms on the chart without you seeing it, or you see this as a full-bodied candle and then immediately back down. What it is, it's these candles here, these 1 second candles, that I call them spike candles. And what they do is they just come straight up and then shoot straight back down within 1 second. It's quite obvious when you see one on the charts. That's exactly what happened here. And what I've been noticing is, if you see a spike candle, um, typically, and what this is just from my observation, is typically if we see these spike candles, they're about to run the other end of it. So what it means is, yes, they sort of pushed price back. They came up and then pushed price back down, aggressively. It looks like an aggressive move, but what I'm noticing is they always come back to run fairly soon. And so as soon as I saw that spike candle, and to see that we'd had that initiation down here and came all the way back up to my entry and had that spike candle, right? As soon as I did that, I got out of the trade. I decided it's not worth the risk anymore because there's reasons to think that things aren't happening the way I wanted them to. Also, we're creating this buy primary, right? Because we've got all this range, initiation, break structure, and then it bobs down back down, and we're actually creating the primary right here. And so I get taken out, right? Or I took myself out. I think it was break even or better, so it wasn't a loss at all. So that was good for that one. And so that was my only trade for the day. Pretty much stopped trading after that, and real happy with that entry. Now, before we conclude this vid, I want to show. So there's that entry, and then we just keep initiating higher prices. Realistically, if I was trading all of this, I think I could have found an entry sort of beyond here or further up. There's definitely like multiple opportunities to get in. I think the major thing here is that when we're so high and aggressive like this, most people are looking for reasons to short the market, and I used to be. Like put me back a year ago, I would have been looking for sells all day long in this area and not been continuing to look for buys. I think that is one of the most important things to realize, is that even though price is initiating and it looks aggressive and you think, oh, it's overextended, is to forget that mentality and forget whoever taught that to you, because it's like you don't need that information anymore. It's price action that you need to understand, not anything else, not what someone else is telling you. Over to yesterday, then. Let's go back in time to yesterday, because there was this most amazing thing that occurred late in the afternoon. I don't normally talk about things about yesterday. I did a video yesterday, and you can see that I took all these buys, and I was in this buy, and yet we didn't connect or anything like that. We didn't get 10R or anything, but we did see that this price had started rejecting away. And I was like, I noticed that we had a 15-second mitigation here. So I think this was my buy that I was in when I was doing the video. And we come up, we mitigate this sell primary, and like I said, it's like 10:30, 11. Not typically trading at that time, but the setup was good, and it was really a pattern recognition thing again, where I've seen so many times I've been in trades around sort of this hour, waiting for them to connect to 10R, only to see them completely reverse direction on me and get completely wiped out. So I didn't really have that in my back of my mind, but it's in my subconscious somewhere, because I did see, as soon as I saw this sell primary form, or this one right here, this top one form, um, it kind of made me think, oh, this could be a scenario like that. And so I thought to myself, look, it's a good idea to hedge I'm long already in the marketplace. Why don't we hedge and go short? And I thought, well, this is a great place to go short from. They've taken a bunch of liquidity. I really believe that if they do want to push price down and take me out of this long trade over here, then the chances of us running these lows is strong because they're so closely stacked. And if you look over here, you can see this is sort of where we were. Where was it? It must have been, I was in the longs up here, was it? I guess I'm going long up here, looking for 10R, and then we turn around and then come back down. And so as I'm looking at, I don't know if that's correct actually on my chart. Is it? Where was it? Fifth. I'm sorry, it's all over here, isn't it? Fifth, 9 a.m. Yeah. So this is the price action here is what I'm talking about through here. And so we can see we're potentially running lower. We've mitigated something. We're bouncing. That was what it was. And so we're bouncing higher. We've mitigated a bunch of stuff, and we're potentially pulling down. Um, as I see that mitigation, like I said, I find an entry which was really golden. We'll go to 15 seconds just to explain it. So I'm seeing cell primary's been put in. We got the, and it's this kind of stuff that makes me pay attention, because once we mitigated, so I'm seeing A to B, B to C, and I'm looking at my B to C leg, and I'm looking at the range in the middle, and I'm going, well, this is the only kind of range I'd want to play off of. It was before the breaking structure, and all of that kind of thing, and it just looked real good. It's the only unmitigated range as well, I believe. And so as I see the mitigation over here, and I wasn't really paying much attention to sell primaries and stuff like that. I'm in a long. I'm just really waiting to see if it works out. And that's when I start to analyze some stuff. I'm like, hold on a minute, range initiation. They come in, they took liquidity, break the structure. We're making sell primaries. I don't want to be in longs if we're making sell primaries. And then we make this another one, range initiation, dollars are here, buy primary gets potentially put in. And if you think about it, where would you want to enter if you've just made a buy primary here and you've got another range and you're coming up here to make another buy primary potentially, right? Where do you want to enter? Right at the very freaking top, right? Because this is likely to hold, is it not? Is this buy primary being activated? Yes. Are we making another range? Yes. Did they break structure? Yes. Are they coming back in, taking the liquidity with this range? Absolutely. After having stacked multiple times. And so as they come up here, I'm literally just looking to a reason to pull the trigger. And so I'm observing it and I'm looking at what they mitigated. And look at this. They take out the high, but respect this high. And as soon as I see that, I don't think I've got my entry tool in at the correct exact moment. Let's just show you exactly where I had it. It was probably there. I believe it was there actually, because I waited for that candle to close on itself. It was a 15 second. I wanted that change of character. I wanted it to sort of mitigate and then start returning, going away. And I enter short one pip stop. I think it was actually a 1.5. I was playing around with the movement of it, but I think I actually had a 1.5 in here. And I'll show you my exit because this is one of the best trades I've ever had, if not the best trade I've ever taken. So there is a 1 to 10, would have been there on the 1.5 pip stop. And let's see, excuse all my rapid movements here. So there's that 1 to 10, but I didn't have that as my target. I felt like, hey, if I'm in this short, I'm in a really good location. I'm right inside of a wick. And I thought to myself, let's hold. Let's hold. Time of day, I don't expect to break a structure. It's late, it's 11:30. I don't expect to break a structure right now, but I do expect a potential continuation of price during Asia session or Tokyo or whatever the fuck it is. I think it's Tokyo. Um, and so I've got my entry. We're initiating away. All is well. And let me show you my thought process on the take profit. Can we actually see it on this chart here? So there's my entry. I'm pulling down. I'm expecting breaks of structure, and I'm thinking to myself, well, if we're going to take this, the low that we just put in, if we're going to take that low, what else are we going to take? Where's the next buy primary? Well, we are in a buy primary, right? And I do believe that we're wiping it out. Sells are heavy, so I'm thinking to myself, let's look at the chart. Where would you want to put your stop, or your take profit? So I see these so closely stacked. I'm thinking to myself, the chances of there being a sell primary or buy primary in these areas, like 1 minute 15 seconds, is real slim. It looks like we've actually mitigated them all. So if there was a buy primary in there, good luck. Okay, you got me. Maybe they're going to react and go. But I just banked on there not being. And then I thought to myself, well, here's the unmitigated slither that has not been mitigated of this primary. That looks likely to me. And exactly there, 38 is exactly where I got it. 1.05038, that was my exit. And I just held out for it because I was just like, you know what? I really believe price will come back down to here. Sure enough, check this out. And you wouldn't believe, I traded this like, I felt like a god trading this, okay? I'll show you why. So I enter, I'm in my trade, I'm going short. I see that this is the last sell primary and we're getting a really decent initiation away. This is the range that occurred. It was a weak, look, you can see a range, initiation, break structure. It's a weak range in the middle. And time again, I'm seeing now that they bring price up, they take liquidity from the middle range. Having like an entry like this would have been beautiful as well. They take from the middle range, just above the middle range, and then they initiate away. I'm seeing this a lot. And so I left my stop thinking, gosh darn it. I go, I go here. I go, look, where do I want my stop? How about I'm entered here? How about I just cover this sell primary high, right? I've entered here. Normally I want to go break even, right? But I'm thinking to myself, just leave your stop freaking a little higher. Just put it to the very top. Lo and behold, they do exactly what we just talked about. Here's that range. They came up, just take the liquidity from it, and then start initiating away. Now, if I was break even, I would have my entry here. Now it looks like there's quite a bit of distance, but the hour is 7:18, so that is Tokyo. So my spreads are pretty much like this. Literally, I believe my spreads would be pretty much just like this. So would I have been taken out? I have no clue. Where was my stop? Above the primary. It was up here above that primary. So I didn't get taken out. I held in by having my stop in the correct location, and what lo and behold, what happens? Price initiates away. This is all. I'm asleep. I'm not watching any of this. Let's go to a 5 minute. Actually, that'll make it a lot easier. I'm not watching any of this, and sure enough, it comes down and gives me what was it? 22.6R right there. 22.6R. We get it spikes down in. Maybe I could have been taken out here. It's a little dangerous. I guess I should have really, in hindsight, maybe have taken just a 10R, or not being kind of greedy, I guess. But I really felt like price was gonna kind of zip through all of those lows. And lo and behold, it did. Where are those lows? Right here. They were going to zip through all these lows, and I was expecting this to break as well, but I didn't know it would break today. So I just thought, let's just go for the unmitigated portion, let them mitigate something and then react, because I don't know if they're going to break here just yet. And sure enough, I got it. Boom. We have then, the next day we got 5 a.m. We got an initiation from non-farm payroll. They've brought liquidity all the way up, and I believe on my sell side, we're very close to tapping that my 1 minute sell primary. I really believe this sell primary is going to have a big reaction. So it's going to be very interesting to see. It's 12:30 right now. I believe we might not even get up into this area. They got a couple more hours. Anyway, that's it. I'm off next week. Might Who knows what I'll be doing? Like it's my vacation set time, so I'm not sure if I'll even pull up a chart, but maybe I will. Maybe I'll feel like doing stuff. So it's whatever I feel like I'm going to be doing. I doubt there'll be any videos. Um, And I wish all of you happy trading. I hope everything's going absolutely amazing. Hope everyone's smashing it, making huge R. I hope you in monstrous trades, 22R, 22.6R. I hope you're getting stuff like that. I'm super impressed with my skills and ability and from where I've come from. I'm getting really, really, confident, which is awesome. And yeah, hope that I wish that for you. Stick around, watch this channel, and we'll keep discussing. All right, aloha. Catch you all soon. Take care of yourselves. Bye bye.